Very good evening, members. I, CA Nidhi Singh, Secretary of Center for Audit Quality Directorate, am very delighted to welcome you to the 19th Quality Cafe session on bank audit being organized by the Center for Audit Quality Directorate. Today we have with us CA Vishal Doshi sir, who is a convener of CAQ, CA Pramod Jainji, Deputy Convener, who is of CAQ, and very eminent speakers and panelists. Past President C. Amarjit Chopra sir, C.A. Dhananjay Gokhale ji, and C.A. Niranjan Joshi ji. The session will be moderated by C.A. Gopal Kumar Dhakan ji and C.A. Jayesh Kala ji. Vishal sir, I invite you to deliver your welcome address, sir.
Thank you very much, Nidhi, and good evening to all participants. Well, friends, it's indeed a pleasure to bring before you this 19th Quality Cafe session on the bank branch audit. As we are all aware that it's the there are events, technical events, I would say, happening all across the country in physical as well as virtual form. And at the Institute, at the Center for Audit Quality, we could not have been left behind. And therefore, we came up with a very novel thought that instead of having presentations, we should have a panel discussion on the various aspects relating to the bank branch audit. And we are indeed privileged to have as the panelist our past president, and I would say the Kha of bank branch audit, the Sri Amarjit Chopra sir. We also have with us two esteemed speakers, also as panelists, C.A. Dhananjay Gokhale ji and C.A. Niranjan Joshi ji. They have also been part of the, I would say, the group who consolidates the guidance note on the bank branch audits. At least since the last 3 years, I have been involved in this publication, and they have always been there. We also have as the moderator C.A. Jayesh Kala and C.A. Gopal Dhakan, again eminent, I would say, experts in the bank branch audit. They themselves are speakers at various forums, and they are also contributors to the publication on the bank branch audit. So friends, like I said, that this is a unique program that we are having, and we would also request participants that if they have any questions, they can put it in the chat box, and the moderators would take them up with the participants. Very important two things I would like to share before we would move on to our esteemed panelists. One thing is with respect to the bank branch audit. Yes, it is an assignment which we all look for getting right at the beginning of the year. But at the same time, there are a lot of responsibilities also that are attached with the assurance, with the attest functions of the branches that we all audit. And therefore, it is important that we plan, perform the audit as per the requirements, and also ensure that the qualitative aspect of the branch audits is not at all compromised, irrespective of the time and efforts that are required. And another thing to add to it, I would like to share that at the Center for Audit Quality, we have released an Excel tool and Excel utility on the bank branch audit. And this is a tool that has been developed specially for all of you friends, where you can monitor the branch audits that are happening at the different branches. And it works as a one-stop shop as far as the compliance with the guidance note on the bank branch audit and the technical guide on the LFAR is concerned, and also on the standards on audit, as well as it is a comprehensive monitoring tool, as well as a documentation tool in one simple to use Excel file that you can download from the CAQ website. So with this, once again, I welcome you all to this important webinar or Quality Cafe session on the bank branch audit. And I hand over back to Nidhi madam. Thank you very much.
Thank you, sir. Moving on to the session, before I hand over the proceedings to our panelists, I would like to read about the brief profile of our panelists and the moderators. Amarjit Chopra, sir, he is a past president of ICAI during 2010-11. He has chaired several important committees that dealt with auditing and accounting standards, corporate governance, and banking at the national level, and IFAC, CAPA, and SAFA at the international level. Chopra sir has contributed significantly to the professional development of auditing and accountancy discipline in India over the years. CA Dhananjay Gokhleji is having an experience of around 27 years and has handled variety of assignments relating to arena of bank audits, including statutory central audit of PSBs and merger and acquisition of urban cooperative banks, and consultant to CEO and board of banks. He is a regular speaker at various seminars on standards on audit and bank audit across all regions and various branches of ICAI. He has contributed as a group member for the guidance note on audit of banks. CA Niranjan Joshi ji, also having an experience of about 27 years. He is a reviewer with PRB, FRRB, and QRB. He is an eminent speaker in various training programs across all regions and various branches of ICAI. He is also a trainer in DIRM and certificate course on concurrent audit of banks. He has contributed in the guidance note on audit of banks brought out by the AASB of ICAI. Our moderators, CA Jayesh Kalaji, is a past regional council member of WIRC for the term 2019-22, and he has was a member of various committees of WIRC since almost a decade. He is a speaker at various seminars, meetings, lectures held by various committees, regional councils, branches, and study circles of ICAI and various other organizations. Gopal Kumar Dhakanji is a writer of Bank Branch Audit Manual published by WIRC, as well as contributed in the guidance note on audit of bank and the technical guide on audit of internal financial control in case of public sector banks issued by the AASB. Now, Vishal sir, I would like you to commence the session today.
Thank you, ma'am, for those short introductions. Friends, what we would now do is that for the panelists, we would throw a question each, and for their opening remarks, for their warm-up session, I would say 10 minutes to each of the panelists. And thereafter, the moderators would take it forward with the questions, the detailed questions on the bank branch audit. So definitely, we would look forward to our Sachin Tendulkar, bank branch audit, Amarjit Chopra sir, to open the batting. So, sir, as we are all aware that we are on 28th of March and the branches are now more getting allotted to the auditors. And definitely with the letter, there would also be a date by which the sign off has to happen. So in this situation, sir, as per you, what are the key components of an audit program which can be tailored for a bank branch audit, and how can the auditors determine the appropriate sample size as well as the selection criteria? Over to you, sir. Sir, you will have to unmute, sir.
Thanks a lot, Vishal, for all your kind words to begin with. And of course, I am also aware of the fact that I am in the esteemed company of two of the top speakers on the subject, Niranjan ji and Dhananjay Gokhale ji. And of course, the moderators that we have today, Gopal Dhakan ji and Jayesh Kala ji. So far as to me, the key areas is concerned for the purpose of the audit program, I have always believed in one thing, that know your customer is very, very important, very frankly. Know your client very well. And I think SA 315 definitely requires us to know that. Unfortunately, what happens is that the day the appointment letter comes in, we are delighted. In any case, there is a reason to be delighted. And those who don't receive feel sad about it. But in this atmosphere of delight, we forget one thing very clearly, that we ought to know what kind of branches we have received. Unless I know what kind of branch I have received, there is no possibility of framing a program, audit program, which is actually good enough for a particular branch. I have seen, after all, the branches, I'm also a branch auditor today for the last 5 years for that matter. Sometimes you receive a branch which is absolutely industry oriented, where there are term loans and cash credits, bills, LCs, everything. Then there could be branches, even within advances, there could be that there are certain branches which are dominated by non-fund based business. There could be certain branches which you are going to audit which are agricultural based advances. There are certain branches which are absolutely housing loan advances dominated. I have always thought of one thing: unless I know what kind of branch I am auditing, it will not be possible for me to frame any audit program. Let's be very clear about it. I will not be able to select even the people, the kind of people who should be going out to audit. Now, if it is cash credit oriented branch, I think my entire audit emphasis is absolutely different. If it's term loan based branch, my emphasis is altogether different. Even the prudential norms, if I look at it, are quite different in both the cases. And the other thing that I will like to say that probably long form audit, there cannot be a better audit program to be drafted rather than reading the long form audit report and basing your audit program on that. We have always tended to ignore one report somewhere or the other, and that is why we are not planning for it. And that is the Ghosh-Jilani committee report, if you ask me. Now, in Ghosh-Jilani committee report, there are kind of questions which I cannot answer under certain circumstances. There are certain questions which I, as a branch auditor, would not be able to answer even. Now, there is a very specific question in Ghosh-Jilani committee report that when a customer comes in, whether he goes to "May I help you" counter or he goes to the cashier, engages him in conversation. Can an auditor do it? Can an auditor check it? Will I put an article clerk outside and find out where the customer is going? And in a branch where there is no "May I help you" counter at all, what should be my answer? There is a question in Ghosh-Jilani committee report whether all the checkbooks have been issued against the requisition slips rather than on the application based on a plain paper. Have we really checked it? I think what I'm trying to say is, then there is a question whether the server, etc., in the case of a particular branch, is in a very safe place, basically, and it is not accessible to anybody. Now, there can be circumstances where probably the staff members themselves eat, take a lunch or dinner sitting over in the server area. Unless I know what kind of questions have been asked in long form audit report, what kind of questions have been asked in the Ghosh-Jilani committee report, I will not be able to answer those questions, and I cannot draft my audit program. It is, I feel sad at times that probably the questions which we cannot answer, we answer in yes or no in the Ghosh-Jilani committee report, where I should be giving a disclaimer with regard to those questions. So my audit program is to be based upon the requirements of that particular branch. What kind of a branch I'm auditing, whether it's an agricultural based branch, cash credit. If it is a cash credit based branch, I can tell you my audit program will say that in all large advances, I will read the sanction letter. I will not only read the sanction letter, I will read the appraisal letter basically of the advance. The reason being, in that case only I will be able to know what kind of stocks level have been considered for the purpose of the DP, what kind of debtors level have been considered for the purpose of DP, what kind of creditors level have been considered for the purpose of DP. Unless I read the appraisal note, I read the sanction letter, and I also read the regular file of the client. In the case of cash credit account, I will not be able to do it. And in the case of cash credit, probably there will be a need also for me to look into the operation and the stock statements, the way the stock statements are being fed. Whereas in the case of term loan, my entire emphasis would be absolutely different, if you ask me. So that is one thing. And then what is the requirement of the prudential norms? And the prudential norms will have to be looked at. And whatever new circulars have come in. Now in June 23, a new circular has come with regard to the settlement and compromises, one-time settlement and compromises. Unless I know about that circular, I cannot plan checking of that. And there are so critical issues, so many critical issues arising out of that circular itself that I will have to read that. So what I am trying to say is, there can be lot many key points which can be taken for the purpose of the drafting of the audit program. And all the circulars which are there of the Reserve Bank of India, I think those circulars I should be knowing. And unless I know those circulars, I cannot comply with those circulars. And for the purpose of drafting an audit program, reading those circulars and incorporating the requirements of those circulars in the audit program is going to be very, very critical. That's all I will like to say to begin with. I think when the questions come in at that particular point of time, one will like to answer those.
Thank you, sir, for that blistering start. And very important, you mentioned about the KYC, that is know your client or know your branch. And also the background material, the technical knowledge and updates that a member should carry with them, I think so, before the start of the audit. Dhananjay sir, continuing from where Amarjit sir left, he talked about SA 315. And therefore, I would say that we are all aware that the accounting standards and the auditing standards are applicable in case of a bank branch audit. Sir, how can auditors ensure compliance with the applicable accounting standards and the regulatory guidelines while conducting the branch audit? And how can the auditors effectively integrate the analytical procedures in the audit process, therefore ensuring compliance with the regulatory requirements and achieving the audit objectives efficiently? Over to you, sir.
You're on mute, Dhananjay.
Yeah, sorry. Yeah. Now, when we talk about the applicability of standards, actually, every standard will be mandatory for any audit. So there is nothing like a couple of standards are not applicable or confined. So if we take example of standards on auditing and accounting standard, both are applicable in verbatim way for branch audit also. Now, if we start with the accounting standards, what a branch auditor has to do is, the best way is that to first refer to the earlier annual report, that is the last year's annual report, go through the notes on accounts and see that which are the areas which are applicable at the branch level, because each and every accounting standard may not really apply at the branch level. So that is the first analysis which one has to do. Second thing is that there will be always a communication from central auditor to the branch auditor under SA 600, which might give instances of wherein there is a change in accounting policy of the bank might have occurred. So one has to even give attention to those aspects also. Now, as far as the accounting standards are concerned, unless and until there is a deviation which bank has stated in notes on accounts and accounting policy, the auditor has to presume that it is verbatimly followed at the branch level. So wherever it is not followed or wherever there is a scope limitation is there, that certain areas are not verifiable by that particular auditor, that should be clearly mentioned in the main audit report itself. So typically we have certain areas, just to give an example, typically accounting standard 15 compliance, that is retirement benefit compliance, is never at the branch level. It will be always at the apex level, that is at the central level. So similarly, any accounting standard which is not taken care at the branch level and which is taken care at the centralized level, that has to be categorically stated in the audit report. Secondly, when we talk about standards on auditing, the CFQ has made that job simple to a certain extent, because if someone uses that Excel utility, it's a kind of an indirect checklist to see that whether every standards on auditing is getting complied or not. Because practically every standard on auditing will become applicable, maybe to a limited extent or to a larger extent, but one has to see that that gets applied and effectively used. Another thing which I will just like to add over here is about typically what helps us a branch auditor much is about the analytical procedures which are there. So one can refer to analytical procedures which are there in SA 520. Just to give an example, a couple of analytical procedures is, one can design certain comparative analysis ratios as a kind of a ready-made template even before visiting the branch, because most of us are doing branch audit in one capacity or the other. So we know what kind of GL level or trial balance will be there. So if one does a good comparison between the trial balances, not exactly on year-on-year basis, but maybe on quarter-on-quarter or month-on-month basis, we get a good kind of analytical overview of the branch as such. Besides that, we can have certain estimates which can be worked out based on these analytical procedures. Just to give an example, suppose I want to see major components of profit and loss account, such as say interest paid and interest received. I can always compare that with the average advance and deposit levels. Now, there are a couple of advantages based on that. One is that if there is a rapid increase in BDDR or NPA level of that branch, naturally my ratio will decline as compared to the earlier ratios. Similarly, I have a good quantum of NPA recovery which has taken place. Suddenly, the income will get booked and there will be a deviational trend which will be there. What I need to do as a part of my audit process is to analyze these trends and have a justification taken on the record. And if not, I have to go deeper into that and see that whether there is a justification is available or not, and then take a call based on the audit procedure. Yeah.
Yep, thank you, Dhananjay bhai. In fact, you very rightly mentioned about the interest ratio as an example. And what you wanted to cover is that there should be templates which the auditor should be ready with for the analytical ratio, and they would just link it or maybe put the dump, Excel dump in that template and get the ratio analysis ready. And wherever there are major deviations, they should deep dive into that. And what I can make out, Amarjit sir and Dhananjay bhai, both of you mentioned is that, like for anything that we do, we need to plan in advance before we step into the branch. And that is very important and critical what we could get from the input that you gave. I welcome our Deputy Convener, Pramod Jain sir, to this Quality Cafe session. Welcome, sir. And thank you for all your guidance and support at the CAQ.
Good afternoon, Pramod.
Namaste, President sir. Namaste, sir.
Namaskar.
Moving on to Niranjan ji. In fact, I would say it is just a coincidence that yesterday I received an article where it was reported or mentioned that Indian banks have reported frauds worth 5.3 lakh crore in the last 10 years. So Niranjan bhai, to you, the question is, what techniques can auditors use to identify potential fraud risks? And which key areas of the LFAR should the auditors focus on to ensure a comprehensive assessment of the bank's risk management practices and the financial performance? Over to you, sir.
Thank you, Vishal bhai. Respected Amarjit sir, Dhananjay ji, and all other dignitaries. Basically, identifying fraud or potential frauds may not be a primary target of the auditors, but considering the kind of long-form audit report questionnaire which was given in September 2020 and which we all have been using since 2021 financial year, I think immediately it comes to my mind that there are 4 or 5 areas where, traditionally as an auditor, we have been looking at from a point of view or a perspective of, these are fraud prone areas or these are critical areas which as an auditor, probably we may have a look at it. There has been a long debate, over a number of years, whether a statutory auditor would be somebody who would be deep diving into fraud areas. But considering the kind of auditing standards which we have currently and the kind of, audit plan or audit program we can prepare, like as the earlier 2 speakers have already reiterated, I would also mention that undoubtedly the CAQ effort is fantastic, and as well as, our guidance note 2024 also has got a very comprehensive audit program. And, to my mind, the first thing is very important is to, prepare ourselves to do a particular audit in such a pressure cooker situation in maybe probably 8 to 10 days time. And from there, I think we can move towards probable risk assessment areas and, where we can use our primary techniques of like vouching, verification, inquiry, structured walkthrough, reading. And I think when we interact in a bank audit seminar, we always come across cases or instances where we observe that, this is a one-time assignment and, the bank branch auditors are not well versed with what are the new circulars, latest requirements. And, I think Amarjit sir pointed out it very categorically, saying that there are glossary of RBI circulars. One needs to understand that what is my scope and what should be my coverage. But prima facie, traditionally in banking, still I believe, the asset side has remained a, potential fraud prone area. And yes, sir. Sorry.
I'm agreeing with you. I'm agreeing with you 100%.
Sure. So obviously, the fraud prone areas remain the asset side of the bank's balance sheet, which is always where the money is going out of the system. Like advances is still the number one fraud prone area. And we already have an RBI circular where early warning signals have been identified through which the risk has to be identified along with from starting from life cycle of the asset application till the final repayment. And at every point of time, one needs to ascertain how this process of, identification of a red flag account and all everything. So as an auditor, primarily, at least on certain accounts which we select for testing, a probable test of risk involved in that particular loan account and how the branch has looked at this risk or up to the sanctioning authority, how they have perceived that risk is something what we can look at. So prima facie, loans and advances, cash and bank balances, suspense and sundries could be the major four areas. And I think the revised LFAR also has got good attention of these four areas when it comes to, identifying a probable fraud risk or a potential fraud risk. The branch auditor should inquire about the system of identification of red flagging in case of advances accounts and find out whether any fraudulent activity in the nature of early warning signal is being captured. Primarily, the branch management has to flag these based on their review monitoring mechanism, as well as certain reports will be thrown by the CBS software. And based on those reports, the EWS accounts will be identified by the branches throughout the period at regular intervals. I believe that, as a statutory branch auditor, our job would be very limited to understand what is the process followed by the bank as a whole, how these reports are thrown to the branch, and what action that branch has taken to identify and assess what were the causes of that particular account appearing into that early warning signal, how what mechanism the branch followed, either by visiting the borrower's office, looking at the papers, appointing specialized agencies, or taking help of any other mechanism to identify whether that early warning signal is identified and corrected or rectified within a reasonable time, or it would be further given for further testing whether this would ultimately result into a fraud. And it will go up to the marking of risk attached to it to the highest level by declaring it as a fraud account by red flagging it. So all accounts beyond 500 million are classified as frauds that will be reported into CRILIC data. So obviously, as an auditor, the another point which we can look at is, we can ask for information which is on CRILIC, and then we can, start testing on whether any EWS data pertaining to these accounts have also been identified. Initially, when we were looking at early warning signals, each bank has defined its own criteria above certain level of accounts. They would be testing it. But what happens is risk is not pertaining to only the amount involved, As an auditor, we understand materiality. So for us, maybe for a bank size, we can define materiality. Again, thanks to CAQ for giving us a very good utility on materiality concept in banks, so that at least we can define our own materiality level when we go for a bank branch audit. But as an auditor, my scope of work goes sometimes below that 10 crores or 10% of outstanding also, because I have to overall understand and assess whether the entire gamut or entire population of advances is being selected for me for testing when I go for a bank audit. So sometimes the early warning signals in a particular bank may be up to a certain threshold amount, but as an auditor, we may observe or we may come across a case which would be, say, below this CRILIC level of 500 million, 5 crores or below, and then we may identify certain risk. So that is also another area where, as an auditor, we should plan in our audit program in advances verification. Also, there could be, involvement of legal disputes or, raids by income tax department or excise department or whatever. All these correspondence files from the accounts which we have tested also can identify, properly whether there are any records for such kind of risk in a particular loan account. As an auditor, we must ensure that each of the loan accounts selected by us, our team should be very much clear on what we should audit into that. And starting from for the entire life cycle, say from credit appraisal, loan sanctioning process, documentation, disbursement, review monitoring mechanism, supervision of that account up to the final amount is recovered. I think all the points where, wherever auditor can identify vulnerability in a particular loan account can be addressed. And I think there are wonderful questions drafted in long form audit report, which would throw light on each of these items of entire loan processing system up to the final repayment, so that auditor can have a focus on what kind of risk is involved in this particular segment of loans and advances. Further, in cash also, like number of cash transactions has reduced substantially, but still there are certain issues which come up, like there is a mismatch, there is a reconciliation issue on ATMs. So there are four questions in long form audit report which are very nicely drafted, which brings out all the nuances from earlier auditors report only, I believe, because most of us have discussed these cases in the past, that the reconciliation of ATM balances doesn't happen. There's always a time gap between accounting for ATM transactions in a bank's balance sheet. There are issues pertaining to offsite ATM balances, etc. Further, recently I've come across certain cases in bank balances also, where one must look at some additional risks, because if you consider the kind of need for having a bank account, I think 20 years back we would have appreciated that some official branches, some branches which are far from the city area, they had this requirement or a need to maintain a bank account with a larger bank nearby, so that operations in management of cash, management of clearing was very much facilitated by these accounts. But if you look at the kind of evolvement of new payment channels or payment system or transaction systems which has evolved in last 5 years, especially, I think the need for operating these accounts or maintaining these accounts has substantially reduced. And as a matter of fact, last 4 or 5 years, my observation about reading bank branch auditors statutory audit report or LFAR is that these accounts generally do not have much comments, and the balances are almost reconciled, and to the extent of probably bank charges which are debited on last day could be the reconciliation points. But the moment these accounts are not yet closed from the system, I think they are again a fraud prone area. I think if you go through the loss data published by RBI, there are certain good classical frauds which have come up, wherein transactions have been posted in a GL account for these bank accounts, and whereas corresponding transactions were not matching in the bank statement. So as an auditor, we need to add in our audit program an additional point to maybe probably check GL account for certain months and matching them with the bank account transactions, and then try to satisfy ourselves that the risk is mitigated from this bank account. Last but not the least, from my take, would be frauds in suspense accounts and sundries. I think they have been sensitive accounts, and we have been learning since our younger days as chartered accountants that these accounts should be tested by the auditors. We must look for the aging analysis of that, look for the number of transactions, and check the narrations appropriately written, and ensure that there are no unusual transactions of debits and credits coming out of this and being transferred to certain nominal account or personal accounts. So I think these are the few points we all should take care while planning the work, ensure that our team is well trained to understand and assess this risk, and ensure that whenever certain points come up, our team well documents it and then ensures that at an appropriate level in long form audit report, the same is carried as a part of our report. Over to you.
Thank you, Niranjan Bhai. I think though you mentioned these were a few points, but you extensively covered many of them. And what you mentioned last, I think so that was the cash to document whatever are the findings, whatever are the observations, and normally what we say as auditors, and I would repeat here, I normally repeat it I mention it everywhere. Whatever is not documented is equal to not done. So I think this is one mantra we all need to keep in mind when it comes to audit documentation. So in fact, that was a wonderful opening comments we had. For our participants, I would like to share that yes, because it is in a panel discussion form, we don't have presentations by the experts. But at the same time, let me share with you that in 1 or 2 days, we will upload the link. So this recording would be available on the ICI TV. So members or I would say the team members, engagement team members on the branch audit, whenever they want to access, they can go through the recording of this webinar, and that would be useful. So now I hand the webinar over to Jayesh Bhai and Gopal Bhai to take it forward. Thank you.
Thank you for ICI giving me the opportunity regarding the moderator of the CAQ, this webinar. First, my question regarding to Amarjit Chopra, sir. Looking at the enlarge the scope of the LFR in the last few years, which clause should be bank branch auditor prioritize as a part of the audit program?
See, it goes without saying. I think Niranjan Bhai said about the asset side, very frankly. And if you really ask me, the advances portion is the grayest possible area. And what one has been finding in the branch audit is that we have faltered on at least one ground in many, many cases. This is what I observed as a central statutory auditor of almost 3 or 4 banks at different points of time. That when my main report is inconsistent with the long form audit report. And how do I catch it? I catch it only in the advances side, if you ask me. Most of the time I have been able to catch it in the advances side. In the long form audit report, there is a very specific question. In how many cases the renewal or review of the account is overdue for a period exceeding 180 days or 1 year? There I write 2 accounts. When it comes to MOC is nil. How the MOC can be nil in those cases? When it comes to the monitoring of the advances, it is very clearly mentioned by us. I'm saying the auditor writes, in a large number of cases, the stock statements have not been received for a very long period of time. If the stock statements have not been received for a very long period of time, and the potential norm very clearly lays down that if the DP has been allowed against a stock statement which is more than 180 days old, the account has to be classified as NPA. Where are the MOCs in those cases? I think to me, the grayest area where we have been actually failing, we have been replying in yes or no, yes or no. Yes or no does not work in long form audit report. Let's be very clear about it. If I say one thing very clearly, that stock statements have not been received, the account has not been monitored, the valuations are not received, the securities are not available in many cases. Which cases, bhai? Tell us now, which cases? You want somebody that your long form audit report should be made use of. And if it is to be made use of, how it can be made use of unless you mention the names of the accounts? And that is why, you see, we had been avoiding our responsibility. Then in 2020, you can say it's the 2020 match. Basically, let's be clear about it. Even given the time frame which is given, it's a 2020 match only for the auditors and the bank branch managers. No, there, if you ask me, the position is that I have every kind of a question on monitoring of the advances, appraisal of the advances, everything. And when it comes to the appraisal, for the last 3 years, the turnover is going down. And in the appraisal, when it comes to the projections, I say the sale next year will increase by 50%. How it will increase? And I have no comments on the appraisal note. I'm going to be caught somewhere or the other. Similarly, there are other situations with regard to the advances where, as an auditor, very, very frankly, I have always believed one thing. If I, as an auditor, particularly in the case of the cash credit account, do not study the stock statements, do not study the debtor statements, do not study the creditors. In every audited, I don't have the audited balance sheet of this year, but I have the audited balance sheet of the last year. I've got the stock statements of the last year. Now, if I compare those stock statements with the audited balance sheet, 90% of the cases I find stocks figures, debtor figures are much lower in the audited balance sheet. Creditor figures are 3 times of the. Then how is the DP is being calculated? You can't say that it is on a particular day. Go back to the other balance sheet also. You will find the same kind of situation. What I'm trying to say is the grayest area is the advances. Whether it is appraisal, it is sanction. Now, in the sanction letter, it is very clearly written that you are supposed to not disburse the loan till the time these conditions are met. Critical conditions are not met, the loan has been disbursed. I'm silent about it, for that matter. I think these are all areas where I am faltering and somewhere or the other. And then the manager plays smart on another ground. LC devolved account, devolved and paid account, bank guarantee invoked and paid account. He parks it in a general ledger control account. Read the prudential norm. It says it has to be debited to the cash credit account to find out what is the irregularity in a particular account. Now, LC devolvement account details are to be given in the long form audit report. Bank guarantee invocation and paid account details are to be given in the long form audit report. And if I have got those details that it has been happening, why should I be looking at it where the account has been debited or it has not been debited? So all those things, if you ask me, the grayest area in any case, and I think Dhananjay talked of the analytical procedures. Very frankly, even long form audit report talks of the divergent trends. If your deposits are increasing, your interest cost should not be coming down, barring certain circumstances. If your advances are going up and your interest income is going down, it means the NPA level is increasing. Is it actually increasing or it is not increasing? This is a question to be actually looked into. So my own hunch is the advances sector, particularly if you ask me, is the grayest area in the long form audit report. And I don't answer it properly. And that is why in 2020, as I said, in 2020, the Reserve Bank of India said, please mention the names of the large advances which you have audited and give the details thereof. Today, in the case of all large advances, it is not a review, it is a transaction audit which you are conducting, if you ask me. Because there every kind of detail has to be given. Whether it is with regard to the securities, with regard to you can say the sanction, with regard to appraisal, monitoring, every detail has to be given, interest calculation. All those things are very, very important to my mind. And I will only come on one point, that it is important in the case of the advances to study the irregular advances as on 31st December 2023 for this year. For the next year, it will be 2024. Because the account which is not irregular as on 31st December 2023, there will be hardly any possibility of it becoming overdue by a period of 90 days as on 31st March. Whatever accounts, because there is a return which goes from the branch to the regional office, from regional office to zonal office to the head office. Study those and then find out what is happening in those cases. So to me, whether it is long form audit report or it is any report, the most critical area is the advances, because asset side is the most important. Of course, there are questions with regard to the cash, etc. Yes, there is a question with regard to the unresponded transaction in the bank reconciliation. No, there can be unresponded transactions with regard to interest, etc. No issue. But if there is an unresponded transaction with regard to the cash transactions, that the cash has been deposited in the bank, not credited by them, then is it a reconciliation item or is it a fraud item? I think those are the points which we need to look into. That's all I will like to say for the time being.
Sir, very rightly pointed out by you. And I believe if this seminar would have been a week ago, then I believe most of our chartered accountants would not have accepted the audit only. It is in such a way that the responsibilities have increased to a large extent. So now Dhananjay ji, your name includes dhan, money. So a question regarding the regarding credit only. Like, sir, Section 20 of the Banking Regulation Act prohibits a banking company to extend credit facility to its directors and relatives. How, at a branch level, can branch auditor verify this aspect? And how will the same be reported if the details of such parties are not available to the branch auditor? Sir, you have to unmute yourself, sir.
See, as far as Section 20 related compliance is concerned, in most of the banks, it is not expected at the branch level. So in most of the cases, it is taken care at the central level only. But presuming that suppose it has been asked to the branch auditor, firstly, the branch auditor has to ask the information from the bank about what kind of declaration the director has given to the bank, because it is purely based on the declaration which the director gives to the bank about the list of relatives. If you have that declaration available with you, then the next step is that one has to find out that what is the custody of all those relatives and directors which is available in the bank based on the PAN, because that is the only source by way of which we can identify the custodies. Now, if this information is not made available to the branch auditor, the next thing what he has to do is he has to disclaim that in his audit report. It's a scope limitation, because if a bank is asking to a branch auditor about giving Section 20 compliance, the basic data as well as the details about the directors and relatives are required to be given. If those details are not available, we need to specify that it is not certifiable and have a scope limitation para included in our main audit report. And that's how it has to be dealt with.
Yeah. Next question,
if I have to supplement it a bit,
yes, sir.
If Dhananjay doesn't mind it, I will only say that any branch auditor can include it as a part of the audit program to write to the branch whether any loan has been extended to the relatives or to the directors themselves. And if the branch answers in negative, it's fine. After all, no auditor will be able to find out who are the relatives of the directors. At least branch auditor cannot find out. That I'm very clear about. I think if you put it into writings to begin with, your duty ends there.
Yeah.
And you can, if you want to ask it even from the regional or zonal office, you can write to them if at all you want to do it. So making it so onerous to a branch auditor that he has to find out who are the relatives of the directors and whether that. And I personally feel, if you ask me, today the bank is very careful that if such loans are to be given, it goes to certain other levels for the approvals. No banker can take a risk so far as that particular part is concerned. That I'm quite sure today.
Next question to Niranjan Joshi, sir. Are there any specific internal control like alarms and red flag established by the bank for prevention and early identification of possible NPA, and also control to manage the existing NPA effectively? How can control the audited and deficiency reported?
In fact, internal control is an area which is very much predominant in the entire banking sector. And as a branch auditor, the first thing what we test is a maker-checker concept, where everything is going through, what you can say, two sets of eyes. So two individual departments would go and look at that. The point is, in my initial remarks also, I spoke about the alarms or red flags. The early warning system, early warning signal system is well established in public sector and private sector banks by now. And obviously, the process of red flagging an account and declaring a fraudulent account is well set. So as an auditor, what we could probably look at it is, whether all the red flagged accounts are being tagged as NPA. That's the first thing we can look for. Then we can ask for a list, as an audit program, we may incorporate, certain requirement checklists from the branch. In the last set of questions, both the panelists have also mentioned that, we need to ask a lot of information from them and then document it. Similarly, we can ask for, what kind of reports are generated, what are the alarms set in the CBS system, or any MIS report for early warning signals or such overdues or such NPA accounts is being thrown open. That I think we should ask for, and as an auditor, we should ensure that our selection of certain number of dates, certain number of accounts, obviously on a test check basis, to ensure that our team verifies that these reports generated by the CBS system or MIS system, along with the comments by the branch management, along with any further documentation obtained from the borrower in respect of, early warning signals or red flagged accounts, or to that matter, any other external report used for NPA accounts, like a valuation report, like a court case if it's going on, or the status of that. All that should be brought into an audit program, and we should ensure that this is checked or verified by the branch auditors team to some extent. Also, there are appropriate questions in long form audit report where the conclusion by the auditors can be reported in long form audit report. And overall, if it goes beyond the maturity threshold and beyond an acceptable level, then obviously it would warrant a report in main audit report as well. So this is how I think we can plan for it, ensure that our team is well trained to execute that particular, and then ensure that our conclusions are being correctly carried out in the audit reports.
Yes, sir. I believe.
Sir, I give one input. Many times what happens, sir? Bankers are not input data in properly. That's why the EWSA is not properly in proper manner work in proper MIC is not generated in that case. Over to you, sir. Kala, sir.
Yes, Gopalji, you were telling very practical thing, and Niranjanji has given a very broader picture of the entire the gamut of the red flag. Amarjit sir, many a times, in fact, all the times we have our management representation taken from the branch. So, sir, can you please elaborate on the implication of management representation for the auditor's assessment of risk, materiality, and audit conclusion in the audit process? Sir, you have to unmute yourself, sir.
See, one thing is very clear. Standard on auditing with regard to management representation lays down a golden rule. You can take any management representation, but you have to test it for its accuracy and veracity. You just can't say that whatever has been said is a gospel truth. No way that you will be able to maintain that. Now, he says that we have been red flagging the accounts. The bank manager will definitely say this. Why not? He has a right to say this, and he has been paid to say so, very frankly. After all, when a peer reviewer comes to my doorstep, what do I tell him? I also say everything is fine. It is for him to find out. So I have to find out. I also give him management representation, basically, that I am maintaining SQC. I am doing all this. I am maintaining my independence. But someone has to check it whether I was independent or I was not independent. Otherwise, the NFRA would not have come to certain adverse conclusions with regard to independence of some of the auditors, or not the small auditors, the big auditors, for that matter. So what I'm trying to say is that, you see, it is very easy for someone to say, yes, we have been red flagging the account. But if you have got the cash credit accounts, I'm going to give you some practical examples. If you have got some cash credit accounts in which you come across that there are only 8 entries during the year. Every quarter you have an interest debit, interest received, interest debit, interest received, interest debit, interest received, interest debit, interest received. Where is the red flag? If in the cash credit account there are no debits, no credits, except for the interest debited and interest received, is this a cash credit account? Is it a term loan account, or what is it? Or is it that the money has already been diverted in full and then we are talking of it? Or if you start reading a particular balance sheet of a particular party and you come across for the last 3 years, his turnover is coming down, but his cash credit limit remains the same. Why? On what basis? I think the red flags are very clearly laid down. If the debtors keep on increasing, I always say, even in the Schedule 3, the management has to give ratios. If the current ratio starts improving, I feel very happy. But if the current ratio is improving because of the debtors increase, because of the idle money increase, or because of certain other increases, then what happens? Is it a good thing that the cash current ratio is increasing in those? Because it is some kind of a distrust of statistics, basically. So what I am trying to say is that the management will say something, but I have to test that, irrespective of anything. He says there is no diversion of funds. Suppose I say in a particular cash credit account, I'm very touchy about the cash credit accounts for certain reasons, for that matter. No, he says that everything is going on very fine. But the party is showing a turnover of 50 crores. In the cash credit accounts, there are credits during the year only up to the extent of 5 crores. Where is the other 45 crore? I say, okay, you have got a credit period of 45, say for 45 days. Still, you may have a credit of about 35 crores with you. Even if your debtors are 25% of the sale value out of 50 crore, still 37.5 crores should be the credits in your account. And the credits in respect of the earlier debtor should also be coming to your account. It is not happening. My first duty is to test whether the GST returns of the party tally with the turnover or not. If these don't tally, I can tell you, sitting over in the disciplinary committee, we have held number of members guilty for this reason only, that the turnover was shown something else, GST return showed something else, and which clearly meant that actually it was not the turnover of the party. So there are certain things which where probably asset 240 may or may not come into play. But today, I have always believed, and I have been maintaining one thing. I may not be a bloodhound, but I cannot be a watchdog also now. I have to be a barking dog at least. Gone are the days when I was treated as a watchdog. Kingston Cotton Mills case is gone. It is centuries old. Today, the kind of things which have happened in the banking industry, almost 18 lakh crores of rupees have been written off in the last 15 years in the banking. So the auditors have to be vigilant enough, basically. And when I have to be vigilant enough, I have to ensure that whatever is being said by the management, I don't take it as a gospel truth. And I do exercise my own checks and controls. Whatever I have to do, I will try to find out where the things are actually going wrong. And this is probably when I have been saying it. If a side bill remains outstanding, I'm giving another example. The manager will say that it is a party which is worth gold, worth being weighed in gold. But if party's side bill is outstanding for 2 months or 3 months, has the party actually sent material for damage to be paid by the purchaser? No. If you really go to the transporter, you will find that this material didn't exist at all. And that is why the side bill is outstanding. If a usance bill is outstanding, I'm not too worried. But if a side bill is outstanding, then I have to be worried. And then I have to say, no, it is not a party which is being weighed, to be weighed in terms of the gold. Rather, it cannot be weighed even in terms of the brass for that particular matter. So what is important for me to find out is that manager will write 10 different things, all goody things about a party. I have to make sure what is happening. I will give you one example, which I have been giving at every forum. We were looking at one of the parties' profit and loss account. The turnover, say the turnover was 1200 crore, because the total exposure of the banking industry in that account was 1800 crore rupees. That's all I can tell you today. And what we came across was that the work in progress was as good as 10 months sale value. Now, naturally, I immediately went to the sanction. That what is the sanction and what is the appraisal note said? Appraisal note is saying that the work in progress cannot exceed 1 month. And if it cannot exceed 1 month, how it has reached the level of the 10 months for that matter? Because I can't allow DP against the work in progress where it is in terms of the sale value to the extent of 10 months, whereas in the appraisal note, it can be only 1 month. Now, the manager kept on telling me, it's what a good party, sir, account running very well, sir. Then what we came across was work in progress was being valued at 2400 rupees per kg, and the average sale realization was only 1300 rupees per kg, which meant that the bank was funding the losses of the party concerned, and the account had to be classified as a non-performing account at the end of the day. So what I'm saying is, let the manager say whatever he has to say, but test it. Test its veracity. That's very, very important.
Yes, rightly said. So next question is, can you discuss the procedure followed by auditor to communicate with the bank management regarding the potential audit modification and their underlying reason? Chopra, sir.
Can you repeat the question?
Can you discuss the procedure followed by auditor to communicate with the bank management regarding the potential audit modification and their underlying reasons?
Potential modification. What is potential modification according to you?
Just that is not mentioned in the question, sir.
Sir, it
No,
could
the
be
point is, if
probably
you are
audit
talking about upgrading a particular account, then it is a different matter. You see,
The
today,
qualification.
modification to the auditor's report. Modification to the auditor's report. Okay. No, because when you talk of modification, modification can be in terms of the status of a particular account or a classification of a particular account.
Yes, that is also possible.
Okay, that's also possible. That is why I asked the question. So when you talk of the modification, it is very simple that before you leave a branch, you have observed certain things. Keep on, please communicate it to the branch that these are my observations. Please reply this. Now, if he replies, it's fine. If it does not reply, at the most, you can write to the regional or zonal manager also. You can, when you write to the branch manager, you have a right to send a copy to the regional or zonal manager also. Now, if you can get an answer to your questions, suppose you say that these records have not been made available to me. Suppose you say, and the manager tomorrow cannot turn around and say, no, I made it available. So you will wait for his answer for a reasonable period, maybe 2 days, 3 days. But beyond that, you cannot wait, because today the time given to the auditors itself is very, very small, very, very frankly. If it does not reply to you, go ahead, submit your report, qualify it, disclaim it, whatever way you want to do it. But don't wait and don't say that I will not submit my report till the time he clarifies. No, it is for him to clarify, not to clarify within a given time frame. If it does not clarify to you, come back, submit your report, and get done with that. Because in my own view, most of us commit this mistake. We say till the time the manager will give a reply or zonal manager will give a reply, I will not submit my report. Why should I be blamed for holding on to the report? I will not. I will put every observation. No, it also happens, and unfortunately it has happened, and we have not been able to do anything about it. The branch manager says, I will not actually press the button for your MOC. Because unfortunately what is happening is, for MOs passing an MOC, we have become dependent upon the branch managers. What we have adopted in these cases is, I will be very frank. I say, okay, you don't want it, you don't do it. I come back to my office, send a letter, send a mail, because mail ID is the ultimate proof now, and a hard copy that these are my observation and this is the MOC that I am submitting to you in a hard copy. And I give a copy of that to the auditors also, the central statutory auditors also. Let somebody ignore it. How can they ignore it? And I will write that the branch manager refused to actually adjust it. So actually he refused to press the button for really making it an online MOC. So I don't mind doing it. What is important for me is I must know what is my right, what is my power, and my obligation also at the same time. I cannot be rude to somebody. I cannot be offensive to somebody. But at the same time, I have to be firm in whatever I believe that I am correct on.
So that's why also many of the bank are taken the certification regarding a bank or branch auditor that MOC not accepted by management or banks.
Yes.
The important point is management may refuse to accept it, but if I believe that it is correct, then I will send a mail of the MOC that he refuses to accept it. That's not my cup of tea. But for me, you can get it tested. And I have, right or wrongly, when I was the central statutory auditor, if an MOC was sent by a branch auditor, if the management will come and say, sir, you can verify it, I will say, you go and show it to the branch auditor. The main records are there, the main records are not here. And if he agrees to you, it's fine. But yes, if he is blatantly wrong, I will agree with you. Similarly, I think I will pass on I will do my job. If I have to issue an MOC, I will issue an MOC and let the central auditor form a view. If he wants to take a risk ignoring my MOC, let him ignore it. If he doesn't want to ignore it, today central auditor cannot ignore it, at least in the case of a large advance. That much I am sure. But if he ignores it, let it be his risk. Why should I assume that risk? I am very clear on it. I will not assume risk. If I feel that something is wrong, I will report it and let the central audit. And I'm supposed to comply with his instructions. And I've complied with the instructions of the RBI. And if he still feels that I am wrong, let him say that I am wrong. I say I am correct.
So very, very, very practical point, very true point, and very dot on the point what is to be done by the auditors. Now, I believe, Amarji sir, you have to leave for some catching of the flight. So some 2-3 questions are there for you, if you can be kind enough to sort out those. Sir, one of the most important aspect in branch audit is the bank guarantee part. So could you please elaborate the aspects to be kept in mind while auditing bank guarantee, that is financial versus performance guarantee? In addition, if you can elaborate on the onerous clause, maximum tenure reporting thereof, and branch auditor's obligation in reporting on those observations.
See, one thing is very clear so far as the bank guarantee is concerned. Now, there is a liability period, very frankly, which is very clearly mentioned in the bank guarantee. Now, if that liability period is over, then my risk is over. But I may still continue to show it as a contingent liability in the books of the branch for a particular period. But my suggestion to it, because most of the banks have been saying that unless the guarantee is returned by the other party, we will continue to show it. We will continue to include it as a part of the contingent liability. Now, till the time they continue to show it as a contingent liability, I feel very safe. But on the other side of it, if you ask me, if a guarantee's liability period has been over for the last 10 years and there has been absolutely no invocation and they are giving me a certificate that nobody has ever invoked it, nobody has ever demanded anything in respect thereof, I think I should be well within my powers to exclude it from the contingent liability also. The reason being, it sounds well that it is only a contingent liability, but how the capital adequacy ratio is affected by this? Look at that. After all, the capital adequacy ratio gets affected even by a contingent liability. Unfortunately, we don't take cognizance of it. That's my precise question. Most of us believe that चल रहा है तो चलने दो ना यार. How does it matter? Contingent liability तो है. Contingent liability है. But if somebody reads the bank's balance sheet, what opinion he forms about it? Suppose if it's full of the contingent liabilities, the rating of the bank goes down. Whatever we may say, definitely it's bound to go down. So I must also, as an auditor, I should keep on guiding the bank. I should keep on guiding the branch as to what is to be done about all these things, for that matter. And so far as the invocation is concerned, once the invocation has taken place, I will not book a liability on that day till the time it is paid. But I will write in the main report itself that invocation has already taken place. It has not been paid. So tomorrow, probably it can become fund-based. And if it becomes fund-based, the liability or the provision in respect thereof may increase. And believe me, the day this 109 becomes applicable, India's 109 becomes applicable to the banking sector, all these liabilities will have to be booked. Can you ignore those liabilities? These non-fund based liabilities also, where the LC devolvement is taking place very high, even if it is not devolved, but if it is otherwise devolving very high, or bank guarantees have been invoked very high, these are going to be problematic for the provision purposes in the years to come. So my own summation is that bank guarantee itself is a problem area. There is no doubt about it. And if there is the liability period is over, 10 years have elapsed, 5 years have elapsed, please start looking at the contingent liability side also. How you can, what you can do. At least put it in the long form audit report, even if you don't get it reduced from the contingent liability. put it in the long form audit report as a suggestion that your current your capital adequacy ratio is being affected adversely. Please get something done about it. That's the important aspect.
Sir,
And of course, commission income on the bank guarantee, etc., is important. That you can always look at. And so far as the performance guarantee is concerned and the financial guarantee is concerned, performance guarantee is something wherein the risk is much lesser. And probably you can go with a margin of 10%, 5%, 20%, whatever margin you charge. But when it comes to a financial guarantee, it is risky, very frankly. And that should be as highly secured as possible. To my mind, most of the banks give it against 100% also, or 50% or 60%. Because financial guarantee would mean that if it does not pay, you are going to pay. So, which is very, very risky for you.
Sir, in that case, if a financial guarantee is classified in a performance guarantee or performance guarantee classified in financial.
Financial guarantee cannot be, you see, for financial penalty guarantees, sanctioning level could be different compared to the performance guarantee. Because performance guarantees invocation does not attract that kind of liability. Whereas in the case of financial guarantee, you are 100% liable for whatever has to be paid. Suppose you give a financial guarantee for 5 crore, what is going to happen? In the case of the performance guarantee, still your risk is much lesser compared to that. So I think when it comes to financial guarantee, look at it, who has actually sanctioned it. And these are not interchangeable in any case. You can't say that performance guarantee becomes financial guarantee becomes performance guarantee. Both the guarantees can become fund-based if the other things don't happen. If the party fails to perform its obligation.
Definitely, sir. Yeah. Sir, next question is for you. How would you, branch auditor, conduct the process of confirming balance with the counterparty during the bank branch audit?
That's a difficult question, very frankly, if you ask me. Getting confirmation itself is a problem, and getting a confirmation from the counterparty is probably most problematic. You may try, but whether you will get a confirmation or not, it's $1 million question. I will leave it to Jan. I think both Gokhale Saab and Yoshi Saab to come in and chip in here also. The reason being, when I read SA 505, external confirmations, to me, that itself is a defective standard, if you ask me. That gives you a leverage that even if the confirmation is not received, even if you don't want to get into the external confirmation, you may look at the other procedures that you can apply to make sure that you are not running the risk in those cases. Whereas if you ask me, I will say that in a report, and this is something that I have been saying for ages now, that if I circulate the letters, say for 100 rupees of creditors or 100 rupees of debtors, and I receive confirmations for only 5 rupees of debtors or creditors, what kind of confirmation I am actually trying? Most of the auditors, what they are doing is they are circulating the letters, and they say that requirement of SA 505 is met. Is the condition met or not met? It is $1 million question, if you ask me. So counterparty question, confirmation, I can go in for. But whether I get the confirmation or I don't get the confirmation, it's $1 million question. And I have been saying very clearly, and I have been talking even in the CLC, in the government, that probably there is a need now that we should say that in the report you should disclose what is the total amount of debtors and what is the total amount of debtors confirmed. What is the total amount of creditors and what is the total amount of creditors confirmed? Unfortunately, nobody wants to do it, and particularly the government companies don't want to do it. That also I can tell you. The government companies say that we can get the confirmation in respect of the debtors, but will not get the confirmation in respect of creditors. They say that wherever we have not made payments for 7 years, 8 years, 6 years, 4 years, 3 years, and the party has forgotten to take the payment, why should we tell them that you have to claim the payment from us? This is also one of the issues which is there.
That's right, sir. Very true and very practical aspect you have covered. So now, sir, this is with respect to red flag again to Amarjit sir. What red flags or indicators might suggest potential fraud or irregularities in the bank branch operation? I know there are many, but if you can just highlight two of the major important red flag which auditors would like.
I have already said. To me, a red flag even is that if in the case of a term loan, rather than making payment to the vendor directly, if you are crediting to the credit account, to the current account or the cash credit account of the party this amount, and then you allow the party to make the payments directly to the vendor, I think to me that's a red flag. You are allowing the possibility of diversion of funds. I will give you another instance that today, but so far, and I will definitely like if at all Dhananjay ji or Niranjan ji can chip in here also. I have seen that we used to say that demand loans. In the case of demand loans, loans against fixed deposit, loan against NSC, loan against Kisan Vikas Patra, loan against certain other things, these accounts will not be classified as NPA till the time the margin is available. The bank managers have found a new way. In some of the cases, what they are doing is, you give him 100 rupees, he gives you a loan of 75 rupees. This 75 rupees goes to the current account of the party. He creates another fixed deposit, gives another loan. Now you tell me how much amount the party has given? 100. How much amount the bank has given? 75 plus the other part. You can say you again reduce 25% of 75, but the other amount has also already gone. Now, where is the margin available, yaar, if the interest is not being received? बैंक ने अपना ही पैसा दिया हुआ है. अब बैंक के पास तो 100 रुपए ही आया था. बैंक ने उसको कितना दे दिया? 75 plus another 57, 58. And I say margin is available. So अगर margin मैं ये कहता हूँ available है तो फिर है. These are all right kind of red flags which will be there. And in the cash credit account, तो जहाँ पे LCs ज्यादा डिवॉल्व हो रही हैं, जहाँ पे बैंक गारंटीज इन्वोक हो रही हैं, वो रेड फ्लैग्स हैं अपने आप में. LCs तो खास तौर पे जहाँ पे ज्यादा डिवॉल्व होती हैं, चाहे वो पे हो जाता, those are all bills get dishonored. And then again, जिस बैंक में बिल्स रेड फ्लैग का मैं क्या बोलूं आपको, जिस बैंक में बिल्स ज्यादा डिस्काउंट हो रहे हैं, परचेज हो रहे हैं, और अगर आप उसको पे नजर दौड़ाएं उन बिल्स के ऊपर, तो आपको पता लगता है कि जो ट्रांसपोर्टर है उसका जीआर नंबर जो है वो सीरियल में है, एक ही सीरियल में है. He is not serving only one party. How can the GR be in the same serial for that matter? But it happens in any number of cases. If you ask me, there can be any number of red flags. और कैश क्रेडिट में तो रेड फ्लैग्स है, रेड फ्लैग. जहां पे स्टॉक स्टेटमेंट हर बार 4 महीने के गैप पे आती है, मेरे आप में तो वही रेड फ्लैग है. जहां पे मेरी ऑडिटेड बैलेंस शीट के साथ कभी भी स्टॉक स्टेटमेंट की फिगर मिलती ही नहीं है, वही रेड फ्लैग है. जहां पे क्रेडिटर हमेशा 3 गुना है जो उसने स्टेटमेंट दे रखी है ऑडिटेड बैलेंस शीट में, अगर मैं उसमें कंपेयर करता हूं, वही रेड फ्लैग है. तो देयर कैन बी मेनी रेड फ्लैग्स बेसिकली. एंड रेड फ्लैग क्या है? किसी की सेल डाउन जा रही है, किसी के डेटर्स एक्यूमुलेट हो रहे हैं, किसी का स्टॉक बढ़ रहा है, किसी का, और जहां पे वर्क इन प्रोग्रेस बढ़ना शुरू हो जाता है ना, वहां पे ये समझ लीजिए कि वो रॉ मटेरियल गायब है, वो वर्क इन प्रोग्रेस में चला गया. वो सबसे बड़ा रेड फ्लैग है इफ यू आस्क मी. सो ये सब चीजें चलती रहेंगी in the times to come. Yes, Niranjan ji.
Wanted to add one point, sir. Absolutely rightly said, sir. We need to plan this in advance so that our team understands these points, because whoever goes for an audit, if he's a chartered accountant with 5, 10, 20, 15 years experience, he may test this. But this 4 or 5 days time, we have a lot of limitations, so only our team does the testing. So absolutely right, sir. We should plan this. Sir, one more addition to my knowledge for the last couple of years is, wherever there is a rollover of load, that is also becoming, sir, a very good red flag.
Absolutely.
And sir, this is becoming like rampant. Like last week only Saturday, me and Dhananjay were traveling together and we discussed this about this rollover. And I think all of us sitting in the audience today also will agree that wherever there is a rollover without replacement of security, only because of only valuation being extended, like say, take example of a gold loan or maybe an agriculture loan, which is a bullet payment, which is being repaid with a higher value. I think, sir, this is something which we should ensure that our team is aware of and we add it in our audit program.
Niranjan, you have hit the nail on the head, if you ask me. Governor Reserve Bank of India last week himself has gone on record to say कि गोल्ड लोन में बहुत प्रॉब्लम्स है. वो प्रॉब्लम क्या है? आपने गोल्ड लोन दिया किसी को, when it becomes due, you give him a new loan, and that new loan adjusts the existing loan. That is not possible. Let him bring the money first, and then you give him a new loan. That is possible. But it is not possible that you create a new loan and adjust the existing loan. This has been going on, very frankly, in the case of the gold loan. Agriculture loans mein to lesser the said the better it is. The government is aware, everyone is aware. On the cash credit, in the KCC accounts, last day को आके आपके 2 एंट्रीज पड़ती हैं, कैश रिसीव्ड, कैश पेड. 3 सेकंड का फर्क होता है पूरे उसमें, कैश रिसीव्ड और कैश पेड में. उतने में वो कैश काउंट भी नहीं हो सकता. और अगर आप कैश फ्लो रजिस्टर देखेंगे, एंट्रीज नहीं मिलेंगी. अगर एंट्रीज मिल जाएंगी तो डिनोमिनेशन नहीं मिलेंगी. तो इससे बड़ा रेड फ्लैग क्या? I think these are all the that is why I said don't go by the management representation. Look at what is actually going on.
And also, sir, don't go by that RBI circular. There are only few EWS we can add further, you know.
Okay, sir. Thank you very much. Thanks a lot to everyone. It has been very interesting to
Thank you very much. Thank you very much, President sir. Thank you very much, President sir. In fact, you're always the practical angle is always very, very useful for all the members, and of course, all those who are doing the bank audit. This session, of course, it would still go on for another, say, 30-40 minutes. But President Amarjit Chopra sir has to leave because he has to catch some flight. So his practical view has.
I don't have to catch a flight, but I have something else to go for. Okay. Let's be very clear about it. I didn't say I'm being honest about it, but I'm committed somewhere. So.
Nice, so nice. Okay. So nice. Thank you. Thank you very much.
Thank you.
Thank you very much.
Thank you very much.
Thank you, sir.
Thank you.
Honest, कितने honest है.
Please continue, Jayesh.
Sir, Dhananjay sir, after a very practical guidance by Amarjit sir, Dhananjay ji, a loan is sanctioned as a non-infrastructure project lending which otherwise would have required determination of date of commencement of commercial operations. DCCO is decided neither by the borrower nor by the bank. What could be account performing status and reporting requirement of the same?
Yeah, see, as far as the RBI guidelines are concerned, they are very categorical about the requirement of DCCO to be defined at the time of sanction of the loan, in the sense the closure of sanction process. Now, if a bank doesn't do that, I will look at it from 2 angles. One is that there is a lacuna in appraisal part, because the DCCO is not predefined. Now, having said that, the other repercussion is that if you don't have a DCCO, the benefits which are there for postponement of DCCO and again, getting into a kind of a limited restructuring of advance, which is very much possible, those benefits will not be available to that advance account. So, if you ask me from asset classification point of view, merely because DCCO is not defined, the asset classification will not undergo change. The benefit which is available with DCCO is about extension of DCCO and indirectly getting a benefit of retention of class of asset by postponing the resettlement schedule to that extent. That is the only benefit which is available. So, according to me, as far as the auditor is concerned, he has to comment that in his LFAR about shortcoming in the appraisal and sanction process. As far as asset classification is concerned, practically it doesn't affect asset classification per se. He is deprived of those benefits section. Over to you, sir.
Sir, in that case, we consider as a monetary period is a DCCO.
Sorry, come again.
मतलब अगर बैंक ने मॉनेटरी पीरियड दिया है तो उसको हम एज ए DCCO कंसिडर कर सकते हैं.
No, moratorium period is about defining how you repay it. So it's a repayment schedule. It has nothing to do with DCCO. And in fact, DCCO is altogether separate from repayment schedule asset classification. DCCO is a kind of a benchmark wherein it is expected that commercial operation should start off. If it doesn't start off, the leverage is given by way of extension, which can be with reason or without reason. So without reason, since you're talking about non-infra, even if there is no reason, 1 year extension is possible. And if there is any reason like court case or any other case, reason is there, additional 1 year is there. So that is 1 + 1, 2 years. Now, again, that is optional. It's not that it has to be given. So it's again depends upon how the borrower approaches the bank and bank extends it. So that's a benefit wherein reschedulement is possible in a way that wherever DCCO extension is sought, like for example, suppose 2 years extension is given. So parallelly up to 2 years, repayment schedule can be postponed without downgrading that asset. So if DCCO is not defined, it is presumed that there is no specific DCCO date. So that benefit is not there. So it's a part of lacuna in sanctioning. But let me add one more point over here. See, there are, at times there might be a shorter period for implementation of a project because project loan is loosely defined as any economic venture. So, for example, if it is a small kind of operator wherein machinery is bought and it is immediately can be operationalized, there is no need for DCCO also. Now, it depends upon, on a case-to-case basis, we need to see that whether the DCCO is defined or not. But since the question was about non-defining of DCCO, I presume that it's a project loan. So auditor has to comment that in LFAR, but it has nothing to do with classification of advance. It doesn't deteriorate that classification because DCCO is not defined. It's a lacuna in appraisal and sanction process.
Perfect.
I would like to add one point here regarding moratorium. If there is a project loan and there is a moratorium given, irrespective of the fact that there is a moratorium, the account can be classified as NPA if the DCCO is flagged.
Right,
exactly.
So to that extent, moratorium has got some sense of, asset classification. But otherwise, rightly pointed out by Dhananjay, moratorium is nothing to do with the project DCCO. Moratorium would only talk about as and when the interest would be paid, as and when the principal amount starts repaying. So it has no direct impact as such with the asset classification. And actually, that's the beauty of this DCCO part of the master circular earlier, And that is something which is not easily configured in CBS system as well. So I always discuss with Dhananjay when we talk on this, that there is a possibility of a manual intervention also on identifying of these kind of, smaller nuances into this circular. Back to you.
Exactly, sir. Niranjan sir, आपसे एक क्वेश्चन था. A branch auditor identify revenue leakage due to the non-levy of various charges in past year. Whether such charges are included or ignored while the calculating of overdue or NPA status.
A very good question, actually. Typically, it happens so when we go for a branch audit and we select certain sample, and when we look at the a sanction letter and try to compare whether all charges are being correctly collected, whether rate of interest is correctly fed into the system, etc. And when we realize all of a sudden that there are certain charges which should have been recorded and recovered, which are not being done. So if you ask me technically what is overdue is, a status which is defined by the circular, which says that any amount due to the bank under any credit facility becomes overdue if it is not paid on the due date fixed by the bank. So obviously, any borrower account where such charges were not levied earlier, and if it is not an overdue, then obviously an impact of these amounts needs to be calculated manually by the bank branch auditor. The system will not have those accounting entries unless the MOCs are effected subsequent to the signing of the financial statements of the bank. So on a daily end-to-end, process, like at the end of the day, whatever is the balance which would not have these amounts identified as debit to this CC account or term loan account or any other account. Now the challenge here is the overdue statement which is generated at the end of the day. Like if you go for a statutory audit of a bank branch, then on 31st March 24, we will probably ask for an overdue statement. And in that, if there is a particular account which doesn't have these charges, then auditor should work out that these charges were due and should have been debited to the CC account or a term loan account on a particular date. And then from that day onwards, they have to work out whether this account was within the limits or not. And then this probably they can work out whether this account would ultimately become overdue. If it is overdue, then if it is for a particular number of days overdue, in case of say working capital limits, it would be continuous 90 days overdue. In case of term loans, if it will become overdue for 91st day, it will become non-performing assets. So some kind of manual adjustment will have to be done, and then it will be done. Otherwise, automatically, such leakages won't be considered as overdue in the books of accounts of the bank, because practically in the CBS system, while calculating the overdues, these identified non-levy of charges would not have been considered by the software.
Niranjan sir.
Yeah.
A circular dated June 8, 2023, a framework for compromise settlement and technical write-off has been issued by Reserve Bank of India. Can you briefly tell us about the compromise and settlement and what are the broad points to be considered by branch auditor?
Particularly in long-form audit report also, we have to answer this question. So it's a point which we should consider in our audit program. You can broadly pick up 5 or 6 points which you can make a small checklist. First thing, we'll start with, you have to ask the branch whether there is any such guideline issued by their head office and take a copy of that. That's the number one point. Number 2 point would be you should ask the bank whether there is any NPA account or is there any borrower account where a compromise settlement or a technical write-off has been proposed and accepted and approved by the competent authority during the financial year for which we are appointed as an auditors, and then obtain the list. Apart from taking this list and taking the clues from what Amarjit sir told us that you can't always rely everything on what bank provides you. You may have a list of opening loan book and compare it with the closing loan book for the financial year and try to identify is there any substantial decrease in any particular loan account or substantial reduction of balance in any particular loan account, because that would be triggered because of any such compromise settlement or a technical write-off. Also ensure that from the circular you can pick up some important points to identify and note and put a checkbox in front of each one of that, like starting from whether the board approved policy for undertaking compromise settlement with borrowers is in place, and the copy of that is available with the branch. Similar policy for write-off or technical write-off is in place, and a copy of that policy is available with the bank branch. That would be our first checkpoint. Second checkpoint could be, this policy should comprehensively lay down the process which should be followed. So it would start with an application from the borrower. Then there will be an analytics by the branch with the numbers and the aging and any other corresponding factor because of which such technical settlement or technical write-off is being suggested, and probably a compliance with all the terms and conditions of the RBI circular. So that would be the number 2 checkpoint. Number 3 checkpoint could be probably a specification in the policy about grading frameworks, examination of staff accountability, etc., all linked with the RBI circular. Maybe a methodology of arriving the realizable value of asset or security, maybe obtaining valuation report from 1, 2, or 3 valuers, maybe physical verification, maybe legal counsel's examination on realizability of having sufficient charge in favor of the bank. Also, maybe a point regarding delegation of power, like which kind of branch person should recommend what level of delegation of power, and then it will be sent to the committee at a regional level or a zonal level or at an appropriate level up to the board level, probably based on total outstanding amount. Maybe there is a specific annexure wherein you're mentioning about compromise settlements in respect of debtors classified as fraud or willful defaulter. Probably the circular elaborates on what procedures the bank should follow if such compromise settlement or write-off cases targeted as fraud cases or willful defaulter cases. So probably that could be one checkpoint. Or maybe the settlement period or the time of repayment period, if it is within 3 months, if it is exceeding 3 months, there is a criteria. If it is exceeding 3 months repayment schedule, then probably one could consider it as a restructure and not a compromise settlement only. So then accordingly appropriate provisions for restructured account and all that would come in. And lastly but not least, ensure that such borrowers are being tagged properly in the CBS system and enough record is maintained so that this restructured entities, there should be a cooling period to be determined by the respective board of the bank for granting a fresh sanction of loan. I think these are few points in the circular which we can bring in as a part of small checklist and then document sufficient for work performed and then appropriately report in long form audit report. I think back to you, Gopal.
Jay sir, Kalaji.
So, sir, regarding gold loan, Amarjit sir has very briefly touched upon that. Only a very specific question, and probably you can give answer in a minute. A new gold loan is sanctioned, which is used by the borrower to repay earlier gold loan, which was sanctioned, which required bullet repayment. The borrower has served interest on time. Does it require issuance of MOC? What could be other possible reporting requirement?
Answer?
Dhananjay ji.
Yeah.
Sorry.
See, as far as gold loan is concerned, actually, whether it is a gold loan or whether it is any other loan, firstly, the end use of any loan cannot be repayment of earlier bank loan. That is a basic rule we need to keep in mind, because it's otherwise it's a clear-cut case of evergreening. Since it's a gold loan related question, let me put forth couple of points about that. See, first thing is that whenever it's a bullet repayment gold loan, as per RBI definition, it's both interest as well as principal. Both are typically paid as a bullet repayment. But presuming that it's interest as and when and principal is a bullet one, first thing which auditor has to check as far as the sanction and appraisal process is concerned. See, as far as bullet repayment is concerned, there has to be a nexus between the income which the borrower is generating, that is the timing of the income and the timing of the repayment of the loan. Because what RBI has been harping upon is that the lending which is done by the bank should be based on repayment capacity and not based on security. So typically in most of the gold loans, it's a security based lending which really happens. And it might be the case that, wherein there is no nexus between the income generation. So just to give you an example, suppose we have a bullet repayment gold loan of say 10 lakh. So say in the month of March, someone has taken a loan. So in next March, that 10 lakhs are entirely due. And if the borrower is having an income level of routine income level of say 50,000, practically after 12 months, he is not going to generate any lump sum amount to repay that gold loan. So first issue will be, for any bullet gold loans, the first issue is about the income generation capacity of the borrower to repay that. Because one cannot raise a bullet repayment gold loan on the presumption that it will get rolled over. So that is first thing. Second thing is that as far as passing an MOC and other things are concerned, auditor has to have a look at whether there is a possibility of evergreening has taken place. Because if the same security is continued and a new gold loan is sanctioned against the basis of the same security, practically for that few minutes or few seconds, I should say, there is a double financing which is happening wherein the underlying security is same. So that's something which one has to be alert about. And if it's a case of evergreening, first step auditor should take to ask for a clarification from the branch management as to how it has been done and why it shouldn't be called as evergreening. On receiving the representation, the auditor has to take a call to call it as a NP or not, because if it's a evergreening case, it's a clear-cut case wherein auditor can call it as a NP account and pass appropriate MOC for that. Second important thing is that one has to also look at how the gold packets are handled. So it might happen that the gold packet of earlier loan itself has been continued without opening. So nowadays there are transparent gold packets which are used by almost all the banks. So we have the date of sealing also mentioned over there. So you might come across a case wherein the date of sealing might be a couple of years back, which is a kind of a evidence that the gold packets were never handed over and they were never opened by the earlier borrower. Similarly, the valuation report should also be there in place to have a circumstantial evidence that there was a genuine need for another loan. And I will just add one last point about this is one has to look at the gold loans opened and closed during the year. Do an analytical review of that. How many gold loans are opened and closed on the same date? and take a clue from that and identify such instances. But one has to be very careful about that. And last but not the least, as an auditor, you are not even required to open gold packets. So one should not venture into that to look at what are the contents of the gold packets are. That is out of our purview. So one should not venture into something which is not there in our scope. Let that be with the valuer and not with the auditors.
Correct.
Next question to Niranjan sir. What document is required for making changes in the risk weighted of assets, and how is this documentation verified during the bank branch audit?
Particularly, we have, as a branch auditor, we have a responsibility to issue a Basel certificate. And there, I think these parts needs to be verified by us. So generally, a capital charge for risk, credit risk is something which is predominantly verified by us. So first of all, one should have a copy of the latest circular. I think 23 was the last circular, which had, all the breakups of this. So we should have a copy of it so that every risk every asset against which a risk can be parameterized can be identified from the circular. And then under a standardized approach, one can have rating assigned to each eligible external credit for a borrower. So if it is a highest rating, then obviously the risk weight is less, and that's how it is identified. So ensure that a copy of rating report for all top customers at the branch is being available to you, and then based on that, you should ensure that correct rating is being punched into the CBS master for those accounts. Also, wherever possible, to the extent, look at risk weight internally assigned to the other borrowers to ensure that appropriate risk weight is being carried for all the loan accounts. On a test check basis, the entire classification is to be checked from the MIS shared with the auditors by the bank, because by and large, 100% verification for each and every account and each and every ledger would be very difficult. Also ensure that, all the claims on banks, either not acknowledged their debts or those who are reported through non-fund based limits, is also being tagged with appropriate credit rating. And that's the most important thing you should look for. Also, if it is a Forex branch, then appropriate heads of Forex items where, Forex risk is also being looked at. In case of mostly corporate borrowers, you would have an external rating above certain limit, because each bank has its own limit specified again, more than which they go for external rating. Also, retail portfolio, where turnover based rating, etc., based on audited balance sheet, etc., you should look at it, and then you can appropriately work for. Housing loans, based on LTV and based on area specific data is being captured in MIS that you can work out. Broadly, look at, trial balance, and from trial balance, ensure that all the account heads for assets are being captured properly in that MIS report. Ensure that, fixed deposits on the liability side, which are placed against the assets, are being removed from the assets so that there is no risk weight attached to those against which there are fixed deposits. Also ensure that debit balances in deposit accounts like saving, current are being captured as appropriately in the asset side, and credit balances in loans accounts are removed from the assets to achieve the appropriate balances on which risk weights or value at risk can be apportioned. Ensure that there would be a branch team which would be monitoring this while preparing this certificate. Ensure that you check the calculation done by them, and wherever possible, carry those papers in your working papers as a support to test that you have verified this particular point and while issuing the circular. I think Dhananjay can add more points on it, because I believe he has contributed a lot on this particular topic. So over to you, Dhananjay, if you want to add anything further to make it more simple.
Yeah, I will just add a couple of points. You have already covered it comprehensively, but I will add just a couple of points to extend that. See, whenever we are checking Basel III related compliance at the branch level, the scope is limited to the extent that whatever assets are lying at the branch level, we are testing that only, or rather we are certifying that only. So I will just take 2 minutes to make that point clear. See, as far as capital adequacy norms are concerned, they are basically to test a particular entity about what is the loss absorbing capacity of a particular entity. So that basically relates to the asset side of the bank. Now, when you talk about the asset side, there are 3-4 things which are broadly one has to keep into mind. One is that what kind of exposure one is taken on a borrower. So there is a different risk weight for different types of exposures. Like if you talk about housing loan, vehicle loan, gold loan, personal loan, industrial loan, the risk weights are differing based on the type of loan. That is the first factor which one has to understand on a gross basis. Secondly, we need to know that what is the secured and unsecured portion. So as far as the unsecured component is concerned, that will carry a more risk of realization. So there is additional risk weight which is prescribed under the Basel III norms. Third one is that what is the asset classification? So suppose you have a PA and NP accounts and the rest of the things are same. Then for NP account, there is additional risk weight requirement is there because the risk of losing money or the risk of realization is on a higher side. And fourth one is that as far as the rating of borrower accounts are concerned, the rating is mandatory for all the exposures which are above 5 crores. So below 5 crores, rating is optional. So if someone has got the rating, naturally that can be adopted, provided that it is in favor of that particular borrower. But in cases wherein they are above 5 crores, then the ratings are not optional; they are mandatory in nature. And second thing is that as far as the rating is concerned, there are two things which one has to keep in mind. That whichever rating agency's rating was used in the last year, that should get continued in the next year also. So if you want to change, the only option to change is that the rating agency might have stopped doing the rating. So that might be the case wherein the rating agency might be changed. Otherwise, year-on-year basis, the rating agency should continue. And secondly, if you have multiple exposures, like one is CC, one is term loan, one is maybe bonds which are issued. Once you have chosen a particular rating agency, the same rating agency's rating for all the exposure should be used. It's not a pick and choose method wherein whichever is favorable rating is picked up. So that one should not do. So these are the precautions which one has to take. And the last precaution is that the rating which you are using, that should not be older than 12 months. So the latest rating has to be used. So these are few additional things in addition to what Niranjan has already said.
So
Yes,
many of the case. Sir.
Yes, Gopalji.
Yeah. Sir, many of the case what happen, branch bank are not give the instruction about the statutory branch auditor that you have not passed the MOC regarding the risk weighted at the branch level. It will be taken at the central level.
Yeah.
If branch auditor believe that the risk weighted is in particular loan account is that much required, and is X amount is risk weighted is carried out by system, then what is the role of the branch auditor?
Gopalji, typically the risk weights which are assigned at the branch level, they are typically tested by the central auditors. But presuming that suppose something is wrongly done, so that's a systemic issue actually. One has to escalate it at the highest level. Like for example, if the risk weight of say personal loan is attached to a housing loan, I'm taking an extreme case. Only in those cases the mistakes might happen, but those are very stray cases. They are not that common cases. But if one is sure about that, one has to escalate it and directly have a word with central auditor. And that's not a MOC related thing as such. It's bank level issue actually. Yeah, Niranjan.
And while issuing a certificate, you have to ensure that a correct certificate is issued, Like wherever you find that there is a gap, you have to get it rectified and then issue a certificate.
That's right.
Otherwise, you can't just give a certificate in the format provided by the bank without adding your comments to it. So yes, if you have identified something, ensure that it's documented well and then it's reported also correctly and appropriately.
Right.
Perfect, sir. Very true.
Yeah.
Dhananjay ji, nowadays the bank requires migration of cash credit accounts to external benchmarking based lending.
Yeah.
Where the loan accounts are still linked with MCLR or base rate, what should be the suggested course of action for the branch auditors?
Actually, as far as these guidelines are concerned, they are there in the master direction of RBI on the interest rate on advances. So that's the starting point actually, wherein these directives are specified. Now, if suppose someone is not following those external benchmark-based lending guidelines and they're still on MCLR or base rate, there are two paras actually, which one can refer to, that is para 7 and para 11. So para 11 specifies that the existing loans and credit limits which are there, whenever they are due for renewal, at that point of time, one has to switch over from MCLR or base rate to external benchmark-based lending. Now, why this came into picture is to ensure that the cash credit accounts, which are there, since you're talking about cash credit accounts, they are not linked with internal structure as such. So they are kind of dealing from your internal cost structure. So when you talk about external, external benchmark-based lending, bank can add that additional risk points or additional points on that, but that will be purely based on some factors which are not in the hands of the bank. So, for example, if I have a external benchmark-based lending, wherein external benchmark is say repo rate, for example, so change of repo rate is not in my hand. So I can have a fixed added up, component on that. So suppose repo rate is say, for example, 5.5%. I am adding a markup of say 3%. Definition of 3% is in my hand, but the base rate, that is the external benchmark rate, will not be in the hands of the bank. So that was the basis for, on which this circular got issued. Now, in case if someone is not following it, because the effective date was from April 2020 for medium enterprises, and for the smaller one, it was October 19. One has to give that in LFAR reporting, that wherein that guideline is not followed, but it's a kind of a regulatory guideline violation, which typically shouldn't be the case in any bank. But if that has happened, that's a violation of RBI master circular or master direction, to be very specific. Yeah.
Niranjan sir.
Yeah.
It is observed that at the time, bank do not take into consideration the impact of BG on the drawing power. Although the security of BG is current asset, how such scenario should be dealt with while doing the bank branch audit?
Generally, if you go through the sanction terms for the BG, very rare case would be that it would have current assets as a security offered against the bank guarantee. So this would be an exceptional case. By and large, the fixed deposits are kept as a margin, and based on that, the guarantee is being issued. So if you come across a case where current assets are also considered as guarantee or security for the issuance of bank guarantee, it's obvious that the auditor has to identify that as a negative point while calculating the drawing power for the working capital limits. So even if it is one-off case you have come across, then you should ask your team to ensure that whenever you're selecting a sample from working capital case, and then testing it from the entire gamut of questions which you have to answer in your long-form audit report, and also defined in your audit program. Obviously, you should add one more point specifying that, while ensuring that you calculated DP correctly by reducing the outstanding exposure. Outstanding exposure means not only the outstanding, but the entire limit which is sanctioned, because at any point of time, they can go through the bank guarantee limit up to so and so numbers. So that has to be reduced. Obviously, as on a case-to-case basis, if there is a specific scenario where current assets are considered as a part, then you should be ensuring that the calculation of DP consider this as a negative point, and it is reduced while calculating the drawing power for the working capital limits.
I think, Niranjan, I will just add one point. I think the query was about possibility that wherein there is an interchangeability of limit rather than related to DP. If that is the query, then we need to test that how the system is configured. Because
in case of Dhananjay, in case of interchangeability, there will not be only current assets. Then other assets also would have a security for this particular thing.
Exactly.
Because so if the interchangeability, then altogether the focus changes of an auditor, and then he would consider the total outstanding as part of my DP. But in all, if I identify and carve out a current asset, then it has to be reduced.
That's right. That's right.
Yeah, exactly. But interchangeability is also a challenge, because as we have discussed this a long time, like the moment you convert a non-fund-based limit into a working capital limit, there is a possibility that it would give you a flare of restructuring, because my overall working capital limit is assessed based on certain methodology, either on a turnover method basis or a working capital method basis. And where I have this leverage, like traditionally it started as an interchangeability from a working capital limit to a non-fund-based limit. But as we have been discussing over a number of years now, the other way possibility is also being very well considered. So auditors should ensure that they have this in their mind, that if there is an interchangeability, additional things to be brought into your audit processes.
Yeah.
So this becomes very important, particularly in case of financial BG rather than performance BG.
Yes. You're right. You're right, Jay. Because interchangeability would often cause an difference when it's a financial guarantee.
Dhananjay ji, very practical question. I believe all 300 participants sitting over here must be very interested in this particular question. If an account is a NPA as on 31st March, but the overdue amount is received in the account of the borrower prior to signing of financials, and the branch manager start insisting to upgrade the account as on 31st March, will it be the, first of all, whether it should be done, and if it is done, whether it will be in compliance with AS4?
See, to answer it simply, it should not be done because you are signing the balance sheet and position as on 31st March, to put it in simple words. If branch manager is insisting, just to go a little further, you can ask him as to under what basis he is asking for that, when we are already in system-based NPA marking era, wherein NPA marking and upgradation both is taken care by the system. System will never understand on 31st March that how he is going to receive money in future and do a backdated marking. So that is something which is out of question now. In fact, of late, what I observed is these kind of arguments are now very rare because once it is marked as per the system, to unmark it, practically MOC is required to be passed. And that is something which no one will like to do. But I will add a couple of points over there. So firstly, this is not event occurring after the date of balance sheet as far as the accounting standard compliance goes. It's a normal event, very normal recovery has been made. So the account will be NPA on 31st March, and whenever he is recovering the money, say on 6th of April, the account will get upgraded, presuming that all overdues are extinguished and there is no delinquency which is continued in that account. So that's the presumption. Secondly, what we need to see is if such accounts are not marked by system as NPA, it indicates that there is a possibility that there is a manual intervention which is already effected. Now, RBI has been very categoric about how the manual intervention is possible. So the bank should have a board-approved policy in place as per September 20 circular. And secondly, at the operational level, these authorities are not supposed to be delegated. So suppose the account is at the branch level, someone above that authority has to do that manual intervention. So if an auditor identifies the account as an NPA, and if the branch is telling him that this account was not marked as NPA because there is a subsequent recovery, the first question before marking that account as NPA, I will ask is that how that is possible through system, because it is system driven. So we have to go a little step further than what we were doing a couple of years back by presuming that NPA marking was a manual process. It's no more a manual process. So there is no question of an NPA account getting skipped on 31st March. If it is getting skipped, possibility of manual intervention is there. And if the manual intervention is not there, it's a grave area. That how the system has failed to identify an account as NPA. So we need to have an approach going beyond simply marking that account as NPA or continuing to getting marked that account as NPA.
This question basically, when we were doing the central audit, this question had come to us. So one of the best answer given by one of my colleague was that okay, if you want to upgrade post 31st March, then if you want to upgrade as on, let's say 7th of April, then let us entirely review the accounts from 1st to 7th, and whichever account are being downgraded, let us downgrade as on 31st March. So that was just in a lighter vein.
Sir, these arguments were there a few years back, but I don't think for last couple of years.
July 21, I think there is a change in scenario when the marking of daily marking of NPAs have started. So I think today this question won't come up. It would be a rarest of the rare case, and that would be very well documented and justified also. Like I can give you an example. Like recently, I've come across a case where such on the reporting date, there was a balance lying in another bank branch of the same bank, another branch of the same bank. And there was an arrangement that on the end of the day, the entire balance should be transferred to the principal account. It didn't happen, So these are exceptions where you can very well get documents and then MOC can be passed. Then there cannot be only a request with folded hands that kindly consider it. There has to be a justification properly given to the branch auditors, and a MOC can be suggested. So the system should continue to mark it as NPA, as rightly pointed out by Dhananjay. If at all there is an adjustment, it has to be documented, and there has to be, a MOC only mechanism. You can't also issue on controls. You have to issue a report or issue FR. Like if you observe that there is a manual intervention, as Dhananjay said, it's evident that, your IFC report also needs a revisit.
Correct. So now, sir, one question given by the one of the participants. Any of you two experts can answer it. Can we take the help of artificial intelligence for the purpose of detection and assessment of high risk leading to frauds in case of advanced portfolio as per LFAR?
I mean, yes, the answer is yes, absolutely, because using of audit tools is absolutely fine. But my personal experience dealing as a bank branch auditor is that, at most what we get is, MIS reports which are generated by the system. So even if we say that we do audit of CBS or in CBS environment, we are still doing audit around computers and the MIS reports which are generated by the computers. So if we get this data in an appropriate format which can be analyzed through the softwares, yes, it's welcome. The only thing, you should document it properly. You should have a valid software license, and you should be able to save it from our basic code of ethics requirements of confidentiality. Till then, nobody stops you from doing it.
I will just add one point over here. See, the question was about whether I can use AI. Now, the question is that, what exactly that really means, because ultimately we will be using certain softwares and tools to analyze the data. There is nothing like, magic wand wherein, AI comes into place and audits the entire thing and throws up your exception reports. It's nothing of that sort. One has to use the tools which are available diligently based on the data which is made available. So there is an inherent limitation. So it's not that, wherein AI tool is connected to the branch data and automatically all the exceptions are thrown out. There is nothing of that sort. It's more of which tools you are using, which audit, supportive data analytic tools you can use. And based on that only you can throw the reports.
Yes, Gopalji.
$1 million question. What is your what is your take on ideal strategy to complete the bank branch audit within 4 or 6 days?
Niranjan sir, if you can give this golden key.
Absolutely. I would start with, basically a simple statement with 3 rules, like whenever we consider an audit, this is the first audit which we do during the financial year. Like March 24, I'm sure that most of us, the bank branch audit would be the first statutory audit we are going to do. And obviously it will be 8th April, 10th April, 12th April would be the date within which we have to do. So obviously one should ensure that they are well equipped with enough material to support their audit team. First thing is you should ensure that you are following all technical standards requirements. Technical standards include standards on auditing. So wherever accounting standards, so wherever accounting treatment is required, one should go through it. But bank branch audit has got very limited scope for technical standards. What it has more scope is regarding the professional standards, which we are following is standards on auditing. So one should ensure that starting with SQC 1 to all the standards on auditing, wherever you can get a clue for improving the efficiency and quality of audit work, all those standards you should follow. Ensure that quality control for firms that perform audit provide guidance regarding firms' responsibility for system of quality control for audits is a SQC 1 parameter. I think we should ensure that our team understands the importance of SA 220 and SQC 1 so as to compare to what is the best quality of work is expected out of us, number 1. Number 2, you should ensure that all other standards on auditing which are directly applicable, which during the course of our today's discussion also, like me or Dhananjay or Amarjit sir has pointed out, is like SA 220, SA 240, SA 300, all the standards, SA 500 series, probably while writing the report, SA 700 series, probably. Like somewhere we pointed out about, joint responsibility of auditors where SA 299 and SA 600 also would come up. All these standards which gives us a good enough background material to prepare a nice audit program. Ensure that all your time is given or dedicated prior to going to the branch on understanding the concepts, telling our team members that, we can do this assignment within the limited time, provided all of us are on the same page. We all carry sufficient enough material with us. Ensure that, along with this, ethical compliance is also equally important. In fact, the first thing what we confirm is that we are ethically compliant to do this audit. So the basic 5 pillars of independence, like integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. I think 2 of them we can directly correlate with our assignment is like professional competence and due care and our professional behavior. Ensure that whatever is suggested mechanism from the guidance note, starting from preparing audit program, accepting the letter, issuance of NOC, sending a requirement checklist, visiting the branch, understanding the environment, understanding knowledge of business, selecting a sample, using whatever tools are available through the channel of CAQ. Like we have a maturity tool, we have a exclusive bank branch audit guidance tool. All that will help us to ensure that the effectiveness and efficiency within which the audit is expected to be carried out is being done. No doubt, 4 to 6 is fantastic. However, we need to ensure that the quality of work is proper based on documentation. So peer review concepts are very important. All of us are going to have this peer review concept by end of this year. So ensure that enough documentation under SA 230 is maintained properly, and ensure that all the hard work which we are doing during this 4 or 5 days of pressure cooker situation, that is being properly documented, that appropriately on particular points of long form audit report, the same is being reported. So I think if these few things we plan properly, I think one can easily ensure that within the 4 to 6 days or 8 days, whatever time is available, one can do this audit very effectively. I think that's from my side.
Yes, sir. With this, sir, most of the questions and queries from the members have been sorted. Over to you, Pramod, sir.
Thank you very much, Jayesh. In fact, it was a very fruitful and learning session for all the members who are participating. And of course, this video would remain there on the ICI TV. Anyone can see it later on also. So I really thank the panelists today, led by our past president Amarjit Chopra ji, and then of course Niranjan Joshi ji and Niranjan Gokhale ji. Fantastic job in answering all the questions posted by initially our convener Vishal Doshi ji, and then of course Gopal ji and Jayesh ji did a fantastic job. Just one point to add before I close is that many times we think that in the bank branch audit there is no need of an engagement letter, or there is no need of a MRL or communicating to the previous auditor. All the 3 things are required. Communicating to the previous auditor, having an engagement letter, having an MRL. What happens that when you go, they say de denge, but unless you say that, unless you give it, we won't start, then only they would do it. So kindly take this, they all are required. And again, thanking each and everyone, all the panelists, both the moderators, all the 3 moderators, and of course, C. Nidhi Singh ji, the secretary to this directorate. And thanks to all the participants who are joining and learning this session. Thank you very much. Thanks, everyone. Thank you.
Thank you, sir.
Thank you very much.
Thank you.
Thank you, sir.
Thank you.